Hello guys, welcome to Unacademy and this Unacademy YouTube channel. Unacademy Articulate, welcome to this. Okay, yesterday we were discussing few questions. Okay, what I will do in this series, I will finish this monetary policy and this banking series, in 7 days with MCQs. Okay, we will finish that. Yes, am I audible? Am I audible? Hi Naveen. Hello. Okay, we'll start this series. And yes, this is presented by me, Rajshekhar. And yes, for any of the subscription, you can use this code. You can take any of the subscription in an academy and you can use this code to get a discount of 10% on any of your subscription in an academy. Yeah, good evening, Divya. Okay, yeah, we'll start this series. See, yesterday we discussed a few questions. Okay, what I'm doing is I'm concentrating on firstly on your monetary policy. That too in monetary policy, I'm concentrating on quantitative tools first, quantitative tools, qualitative tools, and how the money supply is affected with quantitative and qualitative tools. Okay, first of all, you should know what are all the quantitative tools we have, what are all the qualitative tools we have. Okay, yeah, we'll discuss this by the help of MCQs. Okay, see this question. In this, which of the following are the quantitative tools of credit control in India? Okay, I'm asking which of the following are the quantitative tools of credit control in India. You can answer this in your comment section. In live chat you can answer this. Among the following four, which of them are the quantitative tools? Okay, anyone? Divya, Naveen? Yeah, see here repo rate and open market operations are your quantitative tools, whereas this loan to value ratio, the first two options, the loan to value ratio and rationing of credit, are your qualitative tools. Okay, remember once, or you can write it somewhere. We have few quantitative tools. Okay, mainly CRR, SLR. Yesterday we discussed about CRR, SLR. You know the difference between CRR and SLR. CRR is that rate where the bank should keep in the form of cash only with RBI. Okay, SLR is that rate where the bank can keep it with themselves in the form of cash or in the form of gold or in the form of government securities. Okay, then we have repo, then we have reverse repo, and we have MSF, marginal standing facility. Okay, marginal standing facility. Then we have open market operations. See, open market operations, what do you mean by open market operation? Buying and selling of government securities by RBI is called as open market operations. Okay, these are all the important quantitative tools of monetary policy. Okay, and we have few qualitative tools. Okay, like credit rationing. In this option, see the first one, second statement, credit rationing. Okay, I will tell you about this credit rationing, and then loan to value ratio, LTV ratio, we call it as loan to value ratio, moral suasion. These are all qualitative tools, okay, and also direct action. These are all qualitative tools, and these are all quantitative tools. First, remember this. Remember which are the quantitative tools. Yeah, which are the quantitative tools, which are the qualitative tools in monetary policy. So the correct option for this, which of the following are quantitative tools of credit control in India? 3 and 4. This repo rate and open market operations, repo and open market operations are the quantitative tools of credit control in India. Is it clear? Okay, we'll see the next question. Okay, see this question. In this question, I'm asking, what do you mean by policy corridor? What do you mean by policy corridor? I will explain this, but tell me first, what do you mean by? Okay, one second. Okay, policy corridor in monetary policy refers to the difference between what? Policy corridor in monetary policy refers to the difference between what? Base rate and MCLR, repo rate and MCLR, reverse repo rate and marginal standing facility, repo rate and cash reserve ratio. Okay, you can tell me in the live chat section which is the correct answer for this. A, B, C or D. Nikhil, good. Good, Nikhil. Nikhil, welcome to the class. Okay, yeah, I will explain this. Okay, see here. This policy corridor means what? Yeah, okay. I will explain this in detail. See, we have three important quantitative tools. One is reverse repo, another one is repo, and one is MSF, that is marginal standing facility. Okay, in this two we call it as liquidity adjustment facility. What comes under LAF? What are the two quantitative tools comes under LAF? Anyone? What are the two quantitative tools that comes under liquidity adjustment facility? Yesterday I told you this. Okay, repo. What are the two quantitative tools that comes under liquidity adjustment facility? Yeah, you can tell this. Divya, Nikhil, Naveen. Okay, we have two quantitative tools under liquidity adjustment facility. One is repo. Yes. Another one is reverse repo. Good, Divya, good. We have two quantitative tools under liquidity adjustment facility, and with MSF I will explain you the policy corridor. The current repo rate is 4%, whereas current MSF is 4.25%. Okay, and the current reverse repo rate is around, okay, consider it is around 3.65%. Okay, then we usually call it as basis points. What is the difference between reverse repo and repo here? In this, what is the difference between reverse repo and repo? That is 35 basis points we call. We don't call it as 0.35%. We call it as 35 basis points. What is the difference between repo and MSF? 25 basis points. Okay. Usually reverse repo will be smaller than repo and repo will be smaller than MSF. This is the chronology in increasing order. This is the chronology in increasing order. It will be always like this: reverse repo, then MSF. Okay, so what is the difference between reverse repo and MSF now? Okay, it's 35 plus 25. Okay, around 60 basis points. 60 basis points is the difference between reverse repo and MSF. Okay, that we call it as policy corridor. Is it clear? Is it clear what do you mean by policy corridor? Okay, yeah, it's clear, right? Okay, good. We'll see the next question. Okay, again I told you the relationship between money supply and inflation, and relationship between money supply and quantitative tools. Okay, consider the following statements. Okay, about the repo rate and the inflation. The repo rate is the rate at which RBI lends to other banks. In the event of inflation, central bank reduce the repo rate as this reduces the liquidity in the system. Which of the above are correct statements? Okay, answer this. Which of the above are correct statement? What is the correct answer for this? Tell me in the comment section. What is the correct answer for this? You know the definition of repo rate. You know the definition of reverse repo rate. Okay. So, yeah, what is the correct answer for that? And you know the relationship between money supply and inflation, money supply and quantitative tools. Okay, anyone? Okay, yeah. Good, Nikhil, good. Okay, see, the correct answer for this is one only. Yeah, Divya, good. See, the repo rate is the rate at which the RBI lends to other banks. Yes, this is the definition of repo rate. Okay, in the event of inflation, whenever there is a inflation, okay, there will be more money supply in the market. Whenever there is a inflation, there will be more money supply in the market. At that time, to reduce this money supply, to reduce this money supply, RBI have to reduce the repo rate, increase the repo rate. Sorry, yeah, RBI have to increase the repo rate. There is always a inverse relation. There is always a inverse relation. Okay, you can write it anywhere. There is always a inverse relation between, yeah, money supply and repo rate. You can write this formula anywhere, or you can take this as a screenshot. Always there is an inverse relationship between money supply and repo rate. Not just the repo rate, there is always a inverse relationship between money supply and all the quantitative tools. Whenever you increase the quantitative tool, the money supply will decrease. Whenever you decrease the quantitative tool, the money supply will increase. Yeah, is it clear, guys? Write it somewhere, write it somewhere. This is useful definition. This is the useful formula I am giving to you. So, yeah, whenever they ask the question on money supply and the quantitative tool, this formula will become useful. Okay, is it clear? Okay, see here, next question. We'll see the next question. Yes. Okay. Consider the following statements. Open market operations include both outright purchase and sale of government securities for adjusting the liquidity. The market stabilization schemes allow the RBI to control inflation. Okay, I will tell you this. This market stabilization scheme, MSS, is also one of your quantitative tool. Okay, consider the following statements and tell me the correct answer. Okay, give me the correct answer for this. Anyone? You can tell me the correct answer in the chat section. Read the statements, read the statements, and give me correct answer for this. Yeah. Any other? Good. Good, Divya. Yes. Aman, good. Naveen, good. Okay, see. Open market operation in the sense RBI will buy and sell the government securities, okay, to adjust the liquidity. That is called as open market operation. Buying and selling of government securities in the market to adjust the liquidity is called as open market operations. You know this. Market stabilization schemes allows the RBI to control inflation. Market stabilization scheme allow RBI to control, okay, write it somewhere, to control only inflation. Okay, market stabilization scheme the RBI introduced to control only inflation. It is not to control deflation. Only inflation will be controlled by market stabilization scheme. It is also one of the quantitative tool. Okay, remember this. Here both the statements are correct. Okay, yes. Is it clear? Okay, we'll see the next question. Which of the following statements are correct regarding the regional rural banks? Okay, which of the following statements are correct regarding regional rural banks, or we call it as RRBs? Who will regulate those? Who will supervise those? Okay, tell me the correct answer. Who will regulate those? Okay, and who will supervise those? Come on, guys. Okay, another question I will ask, just tell me in the comment section. RRBs comes under commercial banks. RRBs comes under commercial banks. Comes under the category of commercial banks. Yes or no? RRBs comes under the category of commercial banks. Okay, Naveen. Anyone answer for this? First, give me answer for this question. Okay, yeah. See here. They are regulated by RBI. They are regulated by RBI. Yes. Okay, and they are supervised by NABARD. Both the statements are correct. What is NABARD? What is NABARD? What is the full form of NABARD? Yeah, National Bank, National Bank for Agriculture and Rural Development. National Bank for Agriculture and Rural Development. Okay, means NABARD. Okay, National Bank for Agriculture. Who will supervise the RRBs? These NABARDs will supervise the RRBs. I mean, or you can call it as NABARD is a immediate regulator. NABARD is a immediate regulator of RRBs. Okay, but the ultimately these are regulated by RBI. Okay, and remember this, these regional rural banks also comes under commercial banks. Yes, regional rural banks also come under commercial banks. Is it clear, guys? Yeah. Okay, we'll see the next question. Which of the following are part of Reserve Bank of India? Okay, acting as banker to banks. Okay, we call RBI with different names. Okay, one is we call the RBI as bank of last resort. We call RBI as banker to banks. We call RBI with different names. We call it as banker to banks. Why? Which of the following reasons are correct, and give me the correct answer? Yes, Divya. Okay, give me the correct answer for this. I'm waiting for your reply in the comment section. In live chat section, you can answer this question. Okay, so to answer this, you should know the functions of RBI. Okay, what the RBI will do. You should know the functions of RBI. Come on, guys. Good. Okay, come on, come on, come on. Yes, Naveen. Good, Naveen. Naveen Gaur. Yeah, see, enabling the banks to maintain their accounts with RBI for statutory reserve requirements. Yes, RBI does this. Enabling settlements of interbank transfer of funds. Yes. See, if two banks want to transfer between them, okay, I will give you the example of SBI and HDFC. Okay, if these two banks want to transfer between them, then these transfers are handled by RBI. Okay, RBI provides for short-term loans and advances to the banks. Yes, you know this. With use of what? With use of repo. Okay, acting as a lender of last resort, bank of last resort, lender of last resort. Yes, all of the above statements are correct. Okay, yeah, is it clear? We'll move to the next question. Okay, this was asked in 2019 UPSC. Okay, this was asked in 2019 UPSC. This is an important question to know what do you mean by assets and what do you mean by liability. Okay, anyone know the answer for this question? You can answer this in the comment section. Which of the following is not included in the assets of the commercial bank in India? This was asked in 2019 UPSC prelims. Recently this was asked. Okay, so you should know the concept of asset and liability. Good, Naveen. Good. Divya, good. Okay, not included in the asset, it's deposits. The correct answer is deposits. Okay, in asset we include loans. If the banks are giving loans to anyone, if the okay, tell me, I will give you an example. If I go to SBI, if I go to SBI and take a 1 lakh loan and take a loan of 1 lakh, and I will go to SBI and I will take a loan of 1 lakh, and this 1 lakh is asset to SBI. Okay, this 1 lakh is the asset to SBI. Okay, yeah. So loans comes under assets of the banks, whereas if I deposit 1 lakh in SBI, if I go and deposit 1 lakh in SBI, that is a liability to SBI. Why? Why that is a liability to SBI? Because they should give me whenever I want. They should give me back whenever I want. So that acts as a liability to SBI. But if I take loan from the SBI, that is asset of the SBI. Okay. So loans are assets. So loans are assets, whereas the deposits are liability for the banks. Okay. Yeah, it's clear. Okay. Next question. Okay, this was asked the previous year. Okay, this was asked the previous year. Okay, in 2018 or something, this was asked. Okay, tell me the correct answer for this. What was the purpose of intercreditor agreement? Purpose of ICA, intercreditor agreement, signed by the Indian banks and financial institutions recently. Okay, what was the reason for that? Okay, anyone? What was the reason for that? To sign the intercreditor agreement. Okay, this was asked in your previous year UPSC economy question. Okay. Okay, anyone can answer this in the live chat? Okay. See, the aim of this intercreditor agreement was to aim at faster resolution of stressed assets of rupees 50 crore or more which are under consortium lending. Okay. Then first tell me, what do you mean by stressed assets? Okay. What do you mean by NPA? Non-performing asset. Okay. For how many days we will tell it as NPA? If the interest is not coming, if the principal amount is not coming, for how many days, then we will call it as a NPA. If the interest and the principal amount of the loan is not coming to the bank for how many days, then we will call it as NPA. Tell me in the comment section. Okay, good. Yeah. Any other? Okay, for 90 days. Okay, if they are giving loan, they are giving loan for someone. Okay, if for 90 days there is no interest coming back, there is no principal amount coming back from that loan, then they will consider it as a non-performing asset. Okay, then do you know what is doubtful asset? Doubtful asset, what do you mean by doubtful asset? What do you mean by doubtful asset? Okay, if this NPA continues for again 12 months, then we will call it as a doubtful asset. Okay, and all these NPAs and doubtful assets in general, we call them as stressed assets. We call them as stressed assets. Okay, remember what do you mean by stressed assets? Okay. Okay. So the intercreditor agreement was signed. Okay. If any borrower who is not giving the loan back, then they can have an intercreditor agreement to solve this resolution of stressed assets of 50 crore or more under consortium lending. Okay. Yeah. Remember this. Next question. Who will select who will select the chairman of public sector banks? Okay, I'm not talking about the private banks, I'm talking about PSBs. Who will select the chairman of PSBs? Okay, like PSBs like SBI. Okay, like what, Punjab National Bank. Who will select the chairman of these banks? Who will select the chairman of these banks? Okay, tell me the answer for this in the comment section. We have one particular body to select the chairman of PSBs because they are public sector banks, are right? They are under government. Then who will select the chairman of public sector bank? Even this was asked in your previous year question. This was asked in your previous year question of economy. Okay. Yes, Divya, good. Okay, remember we have something called as Bank Board Bureau, BBB. Okay, Bank Board Bureau. Okay, yeah, according to the recommendation of PJ Nayak committee, according to the recommendation of PJ Nayak committee, we constituted Bank Board Bureau and these people and these bank board bureau people will appoint, okay, sorry, will appoint the chairman of the public sector banks. Yeah, is it clear? Okay, yes, that's all for today's session. We will have around 10 to 15 questions every day, so that in 7 days I will complete this monetary policy and banking. Then we will continue with other chapters of the economy. Okay, that's all for today's session. If you found this session helpful, share it with your friends and give me a like. Yes, thank you. Thank you, guys.